Hey, I'm Jimmy, and this is my YouTube channel, Taking Trades. It's a channel dedicated to day traders where we provide valuable teaching tools, information, as well as live trades. And all of this is without a subscription or buying any courses. What I wanted to do today was reference my video from yesterday and where I mentioned that I had missed a bunch of opportunities. What I did was I went back, looked through some charts, found some other opportunities that I missed, and I want to review those, go over where my entries should have been, maybe why I didn't take the trades, and just anything else revolving around those trades. We'll just kind of get into that. Happy New Year. I know it's January 1st, the markets are closed, but I decided to come in and film a video anyway, just because we can still talk day trading, right? Even though the market's closed? Yeah. All right, let's jump into the trade.
All right, let's jump into this trade. So to start off, I do want to say that I'm using TD Ameritrade's Thinkorswim platform, and that allows you to back trade what they call on-demand virtual trading. So you can see I've got this button clicked here. I've gone back to December 17th at 7:36 in the morning, and this is just a way to back trade strategies. It's great for education, it's great for learning. I'm using it today because I want to show you how to take a short position on a large cap stock with low risk and high reward potential. So I don't want anyone to think that this is a live trade. This is not real money. This is paper trading, and it is using Thinkorswim and their on-demand feature. So what you can notice is with AMD, it opened up and pushed down really heavily with these two candles. It consolidated sideways just a little bit, sort of paused. Some people may have took a little profit on this pop up. Then we got another push down with a longer top wick, which is indicating some selling pressure. And now if I push play and we watch these candles come out, you're going to see that this candle now is going to start to form a doji. And a doji is just sort of equal pressure between buyers and sellers, which shows a slowdown in the price action, which is a great point sometimes to take an entry because you're likely going to move in the other direction. So right now we see we're getting closer to the end of this minute, and we're starting to get that doji, so I'm starting to kind of watch it and say, okay, it's slowing down. The minute's about to close. I do have 1,000 shares loaded, which is a typical share size for me with AMD for a starting position. We did get the doji, and now we're getting that pullback like I talked about. So this could be short sellers who have been successful here, have seen this slowdown, and now they're covering their position. And covering their position just means buying. So it causes the price of the stock to push up momentarily. We're going to use this to our advantage to take this entry. So I got a new high after this push down. I got this new high. And what I want to see next is another candle setting another high, a higher high. Sort of a step up into our direction. Ultimately, I want the price to push up into these lines. We have a 9 exponential moving average here. We have a 20, a 50, and then this dashed line is the VWAP, the volume weighted average price. So my entries, typically, I like to wait for them to push into some overhead resistance, which would be these lines, these moving averages. So you can see we're getting that. So I'm really interested now. And I'm going to pause it for a second. The other thing you can see is as we get a longer wick on top, it's telling us that we're getting some selling pressure above, because while the price came up to form that wick, it got pushed right back down, and it's leaving sort of that indicator. It's sort of giving you maybe a little hint about the future of what's going to happen. So we keep playing out. So stock's moving down. We're starting to get that nice pin bar doji. And now I've got my higher high, another higher high. Now I want to see a lower high in a candle that starts to go red. and that'll be my entry point. The setup is so pretty that in this scenario, I wouldn't be too hesitant about jumping in with my 1,000 shares. So I'm sort of just finger on the trigger here on the sell. You can see we're closing out our minute, all right? Now if this starts to turn red, I'm gonna jump in. So I'm in short there, 1,000 shares, $19.62. And now I'm just kind of waiting and see what's going to happen. My stop is going to be above this candle. If we go above 1969, I'm going to jump out for a moment. And then to be prepared, I'm going to switch my order to 500. And if we get a nice push down, sometimes I'll take initial profit and then let the last 500 shares ride out for a while. So let's see what happens. We're at 1962. We're pushing down. Beautiful. Sometimes I like to get 10 to 15 cents and take a little profit. Let's see if we can get a push down here. And sometimes that price action is hard to sit through. Because you see profit on your P&L and you want to take it. Right, there's 52, so I'm going to hit the buy. I just bought 500 shares back and took a little profit. I'm only have 500 shares remaining short, so I'm just going to kind of let them ride. My strategy here is that my average price is 1962 now, so I'm not going to let this trade go back above 1962. I don't want to let it go against me. So I'm just going to keep watching it. And you're just kind of waiting to let these 500 shares kind of ride. Let's just see what they can do. So we're getting kind of close. Not liking how close that's getting to 62. If it pops above 62, I'll jump out and take my money. But hopefully we'll get another push down. We can take some profit. So I think this was short sellers taking profit off of this candle. It pushed down. People entered with us, pushed down. They took a little profit like we did. We took our 500 shares. Oh, that's beautiful. So on that push down, I'm just going to take it. There it is. All right. So we entered here. We gave it 2 minutes. We're up $125. So I'm going to pause that for a second. So the strategy here was you got the good push down all the way here. You saw this doji kind of slowing up. Then we got a reversal or a pullback, people taking profit. Got a higher high here. Next candle opens up, we get our second higher high, which I like to have at least 2. Sometimes 3 makes it even more accurate for me, in my opinion. And then the beautiful thing was this formed a nice doji with a slightly longer top wick, which indicates a little selling pressure. Then the next candle opened and we got our lower high. If this candle would have jumped up here and gone above this one, then I'd have waited for the next candle to be the lower high. But because it was lower than this and it started to turn red, and actually it broke the body of this candle, I felt comfortable taking the short position. So 1,000 shares short, we pushed down, we sold half our position, we waited for this to come kind of ride this wave up, got another dive down, we sold our second 500 shares, so we had an entry order, we had 2 selling orders, so it'd be 3 commissions that we paid here, and our profit was $125. So that's how I take a short position on a large cap stock with a gentle size being 1,000 shares. You know, obviously you can extrapolate this out and go 1,500, 2,000 shares as you know, as your confidence improves with the strategy. But I typically go for 10 to 15 cents on that first pop to sell half, and then I'll let the second half ride and just see what happens. So thank you for viewing. If you have any questions, please post them below. If you have any comments, good or bad, I'll take them all. Thank you for stopping by, and I will be back tomorrow, January 2nd, where we will be able to live trade again. So thank you for stopping in, and again, Happy New Year. Thanks.